Welcome back to Ferocious Education, this is Ed. Today I'm going to be talking about, once again, Ideanomics. It's been around 2 weeks, and the reason I'm visiting this one is their earnings. Now I'm going to go through technical analysis briefly, just to get a little bit of an insight in terms of the traders' psychology coming into this one. Then I'm going to go towards a little bit of the research that I could find about this one, anything I could find from the anticipation of the earnings, and a little bit of what I think is going to happen to the stock comes earning. Let's jump right into it. So, right now, we're looking into initially a 1 week perspective. So on a 1 week perspective, what we get to see is an MACD that is actually curving up. Now, that looks actually amazing, and you get to see a really nice bullish kicker all the way down from last week where the low was 80 cents. It recovered around, I'd say, 13, 14 cents from that low. You get to see this really massive bullish kicker, and that looks amazing. Now, on the momentum, it looks like it's recovering from last week, but it's still lower than 2 weeks before. William percent R, it looks like it's actually sitting somewhere closer to neutral. It was oversold for quite a little. Right now, it's recovering towards a really key point. If you look at this line here, last time it was at this level, it saw retraction, so it needs to kind of continue this one coming in early Monday. Now, on the IDEX, it shows in a very strong negative trend. And usually around this point, around 50 or something, it kind of sees a reversal. Moving averages went from fullish bearish to half bearish bullish, so it's neutral. Now, taking a quick look into a 1 day perspective, MACD has gone positive, amazing news. IDEX shows in sloppy. William percent R puts this one at overbought for 3 days straight, but you get to see it has jumped for 3 days straight, so that's still good. Now, it has to just escape the bearish trading action zone, where the 30 EMA is above the 10 SMA right on here. Currently, it is almost fully bullish on a 1 day. Once it crosses that 50 SMA and the 200 SMA line, amazing. And one thing here that is we need to be very careful of. You notice that the 50 SMA has been way up there and the 200 SMA been down there. And it's currently on the trend to cause a Death Star, perhaps in a week or so. So that's something dangerous. Hopefully we don't see this. If the price keeps improving, we can actually see more of a turn away from that kind of price action. Because usually Death Star is a really bearish sign, and institutional buyers usually cash out on that scenario. Next thing we're going to do, just merely for the next few hours, we're going to do the 5 days 2 hour perspective. All sloppy, but on ADX and whatnot, but a really nice uptrend. Looks very strong, all the way from 70 cents all the way to up to 95 cents. Looks really bullish, and it looks like it might actually see a bit of a green onto Monday pre-market. Coming in next is the moving averages. So we're going to only be addressing the moving averages band just for the sake of the argument, because historically it hasn't really traded well within it. 81 on the bottom, 90 in the middle, and 99 on the top. Now, next thing coming up is the moving average band, the stochastic fast and the stochastic slow, almost at the moving average band there, and we get to see that it's actually curving up, and that is a really bullish sign. You want it to curve up. Usually when you're curving up, you're looking somewhere around this area. So really what this reminds me of is very much similar to this area here. And so what you want to be careful of is this here was the last earnings, and it doesn't drop, and I'll explain a little bit into the details of what I think about this one later on. Fibonacci retracement, a significant support on the Fibonacci retracement sits at the 90 cents. 122 is the next resistance on the Fibonacci retracement, and then 148 is the one above that. Now let's take a quick look into supports and resistances onto this one. Current support is sitting down at 85 cents. Well, actually, I'm wrong. It sits at 89 cents, and then 85, and then all the way down to 80 cents or 79. Above that, resistance is now. We're looking at 96 cents, sorry. 102. As soon as it crosses the $1, I do expect that we can actually even see $1.22, and then beyond that, 131. Quite exciting things for people who are holding this one for a while. Now, the next thing I want to look at is institutional buyers. They usually give us a little bit of an insight about what's yet to come, right? And, you know, they have a little bit more of experienced folks out there. They're calling the shots, and we need to learn from them a little by seeing their actions. So, taking a quick look, let's see in November, okay? November starts by Apollon Wealth Management throwing out their position, creative planning, increased their position, I believe, by 6%. Bergen KDV threw out their position, Creative Planning threw out their call, California Public Employee Retirement System, which usually is more ETFs, they're less experienced than institutional buyers, bought around 273,000. Now, Wells Fargo dropped 75%. MT and Bancorp has actually bought almost 3 million shares, and that's the most significant one you need to look at. But BlackRock threw out their entire position. So what you're getting here is warning signs. So some people want to buy this stock at this level because perhaps maybe a Joe Biden win, and I'll explain that in a minute. Why it might be effective for this stock, for this stock to benefit out of a Biden win. But it could be that's why they're buying. BlackRock, on the other hand, perhaps they've been there for quite a while, and they've already lost 50%, and they have several rules for institutional buyers to cut losses, and that could be a reason out of it. Next thing coming in is their blogs, and first, I'm kind of a little bit disappointed onto their October newsletter. Other than, for instance, this Select Track, basically investment. They only have the earnings on there. Where is the great stuff? I want to see diagrams. But anyway, we can actually still extract that from their SEC filings. So on September 15th, so we still don't have October kind of an update, which I expect to happen perhaps on the next earning. But currently what we're looking at is for the month of July and August, we're seeing that 203 vehicles have been delivered and 557 invoiced. Now, there's an updated one other than this one, September 15th. I believe this one goes on, well, let me close this one here quickly. This one goes in after, at 15th of October. Perfect. Okay, so we're looking at total units delivered. And what we get to see is, well, there's no deliveries for trucks, which is not important, but we want to look at invoices. Where are the trucks invoices on here? That is something interesting. Alright, well, we'll kind of give the truck one a little bit off break. Taking a quick look into the taxi/ride hailing. We get to see on July, we see a massive order 269. Amazing. People actually went on and thought, alright, this is amazing, this is bullish. And then we look into August, 269, 268. What happened to 68 here? And then 103. Okay, so we're seeing a massive jump at the start, pre-orders and whatnot, perhaps. And then we're seeing a massive decline and then slow recovery. So what we expect is maybe October we get, what, 130? We can slowly climb back to 269. Usually sometimes this happens where you get an initial spike. Coming in towards deliveries, we see that they're working on deliveries more and more. Kind of makes sense, but still, that's amazing that they're delivering more units. Coming in towards, let's say, the next thing we want to cover is when is their earnings? November 9th. Well, is it after or before? It's after. Like the last time at 4:30 p.m. Sorry, it's going to be 4 p.m. and the conference is going to be 4:30 p.m. We're going to explain exactly what happened in the last conference because I've been watching this one for quite a while. And you know what? I watched level 2 and the conference at the same time, and I'll explain exactly what happens. At least what happened. Next is Solid Track. This one is exciting. Now, Ideanomics did not buy it. I've seen some people saying Ideanomics bought it. No, they have 15% stake, which means they're not the major owner, but still the revenue coming out of it, they will benefit. So 15% stake in E-Tractor company. And it's going to be basically offering farmers independence from pollution, infrastructure, price volatility associated with fossil fuels. Quite amazing there. The actual company itself is valued at $75 billion, or at least the kind of market is valued at $75 billion for the global agriculture tractor. I don't have the current net worth of the company itself, but basically they acquired 15% at $1.3 million. Largest segment of agriculture tractors is below 40 HP segment, where Solid Track initial 3 models addresses the broad need in the market. So there's that. Next thing is, it says according to Research Market, the global agriculture culture tractor market is valued to be at $75 billion, with the North American market expected to reach $20 billion by 2023. So there's really nice projections coming out of there. And one of the things is basically it being California based. So that is exciting, especially with California rules with EVs and stuff. This one puts it at a really high benefit. Now, taking a quick look, I'm going to skim quickly through, the company they acquired. If you have stocks in IDEX, you automatically have also invested in this company by default. So investing in this company here, they have basically, I believe, 3 different models: compact electric tractor, CET, and then the utility electric tractor, and then you got your e-farmer electric tractor. Now, they have a little bit of different uses, and you get to see, for instance, this one here is more of a little bit of floor jobs. I think it's more of tiers about their utility itself and the kind of heavy load or low load. And so there is different presentations on there. I'm not going to go through exact details, but I get to see if I want to try to purchase it and try to see, well, how much does it cost, right? Well, it's going to be available late 2021. You can already press orders or send orders through. California residents can qualify for special buying incentives, and you can expect that as we go on. Perhaps if Biden wins, and I didn't check the numbers in the last hour, but looks like Biden is already in the lead. So Biden has votes to push for EVs and clean air, pollution cuts and all that stuff. This one might have a room in it. Next thing is, well, I'm going to go towards the presentation. Sorry, the other one was a Chinese presentation. Now, I did go through the presentation last time, and I don't see anything updated in terms of this presentation, but some of the things we might want to look for is their USA Medikey, perhaps updates, the Meg China updates, as well as the Tree Electric one, and basically that is what we're trying to look for. Now, I did try to go on and find the Meg satellite images, try to compare month to month to month kind of traffic. I'll fail to do so because I could not, for the life of me, find an accurate Meg sender address. Anyway, goals for the second half of 2020, and this is what you kind of expect to hear about tomorrow. Execute on delivery revenues from orders existing. Alright, we're already going through that. Continuing developing diversified order pipeline. Okay, develop battery as a service partners. I didn't hear anything about this one here. Bring in additional dedicated financing sources online. Begin building of North American EV supply chains for introduction of the Medikey Motor Works. I kind of heard something about this, but it's still in the works, so I'm gonna say no for now. Conference itself, you can go on their website, go to investors, and then go to events and webcasts and sign up into their next earnings. Now coming on towards the look into their last 2 earnings. I'm going to zoom in here, you should be able to see the screen properly. I'm going to compare first quarter 1 and then going to move to quarter 2 so you can get an image for what quarter 3 looks like. So first of all, we're going to be doing the cash. So total current assets went from 7 million to 10 million from December 2019 to March 31st. Next thing we're looking at, well, this is the next quarter, so I'm going to do that first. 7 million to 42 million. Big amount of it has been the cash and cash equivalent. Quite amazing. Comes now towards the revenue. So we're switching back to quarter 1. And when it comes in towards the revenue, take a quick look here, and this is something that's a little bit disappointed it doesn't look that well. Revenues from related parties and revenues from third parties. Now, they're massive diversifications. On scratching the surface, you might be looking at, well, where the hell did the $26.6 million go? A big part of this is that they are revamping the entire business model. They're restructuring the business model. So in a way, IDEX just basically turned to a SPAC, give or take. But it's more of almost a trust fund, in my opinion. The related parties' revenue has gone to null, and their money is coming in from third parties. So in a way, they're investing in private acquisitions of smaller companies in a percentage of them, and you're investing indirectly to those companies. At least that's how I see it in terms of coming in towards the quarter reports. Gross profits went from 27 million to around 44,000, and when we get to look into the net loss, 19.9 million income, to around $12.6 million in loss. Right, well, let's take a look at quarter two. Quarter two, we're looking at a 14.4 or 14.5 million income from June 30, 2019 to roughly 5 million in terms of revenue. Now, the revenue has dropped from 13.7 million to 255,000. Total net loss, you're looking, very similar to the other numbers we've seen. $5.2 million coming in profit from June of last year. June of this year to around $26.4 million. Alright, well, let's take a quick look at quarter one to quarter two, right? Maybe things are getting better. Revenue, we're looking at 44 for gross profit. And then we're looking for gross profit here around, well, 255 million. So improvement, multiple percentages increase, around 5 times increase, 500%. Quite exciting. But net loss, we're looking at 26.4, going on from 12.6, double, but there's been as well some acquisitions, I believe, coming in from the Meg Center, or payments to the Meg Center. I believe I've actually heard about that one here. Correct me if I'm wrong, but still, when it comes in towards seeing how deep they are in terms of debt and whatnot, it's quite a hassle. So 36 million is the current cash, and they made a net loss of 26 million. The next earnings is make it or break it, and that's why I have to address something here. In the last earnings, we had a lot of anticipation for this, and you know what? I really wish the earnings comes in and beats it up, and anyone who's shorting this can really get under a short squeeze, and you know what? We get all profits. Let it jump to $3. I would be happy to see that. I'm not a hater. This one has potential, and I really, really, really want to see it succeed. So I really hope onto Monday that it actually beats earnings and flies. Now, one of two things are going to happen. One, it's going to run onto Monday early on. It's going to dip a little coming in towards the afternoon. And then a little bit closer to it, it's going to run once again to almost the same level around 4 p.m. Here's one of two things that are going to happen. And this is based on experience, especially this one here in the last earnings. If earnings aren't as good as we've anticipated, no, it has to be better than what we anticipate. Because remember, buy the rumor, sell the news is already jump 20%. What we're gonna have is something very similar to this: 185 all the way down to 143, 40 cents on a dollar. Or it's going to prove us right. It's gonna see a really nice earnings. It's gonna beat the earnings estimate. Then we can gap up, and hopefully it's a second one. And I'm really hopeful for this. But myself, I don't like holding through earnings, because you know what? My risk tolerance is trash. But that's why I've been in the game for long. The next thing here is Joe Biden might be winning, and the EV sector is probably going to get a boost. So you might get a run as well. That's double catalyst. You know what? Really hope we see the elections on the weekend. Or we get it, Monday morning. You might have EV industry rally plus an earnings. So you might see this one a really nice jump. What do you think about this ticker? Make sure to mention down in the comments below. Should I subscribe and like? You have a wonderful day.